My name is Ryan Jackson. I'm a real estate investor in the great state of Texas. I would appreciate it if you would hit like and subscribe and share. Today we're going to talk about, is it a good time to buy real estate at the end of 2023 and into 2024? So is it a good time to buy real estate in 2023, 2024? I mean, this is not financial advice. I'm not analyzing these deals, so don't come at me and say, hey, Ryan, you told me to buy a property when you really shouldn't have. There's a lot of things that go into this. If you have a tremendous amount of cash and you want to invest it, that's probably a good time to buy some real estate. But if you can afford the 9% interest as a real estate investor and it makes sense, you probably should buy that property. Right now with these rates that are just sky high, people are taking discounts on their property because they know the market's bad. The days of great markets are over for the time being. I mean, I don't know how long it's going to be like this. 2024 is probably going to be, where a lot of chips fall. I've been hearing that for a while, that a lot of people are speculating on 2024 as being a bad market. Are we talking real estate market? Are we talking commercial market? Are we talking Wall Street market? What market are we talking about? Are we talking about the grocery market? For real estate, I expect a digression in 2024. You don't get those monster peaks without some kind of correction in most markets. I mean, you can look at the Wall Street market, you can look at NASDAQ, and you can look at these different markets, and you're seeing a lot of people are taking some losses there. One thing that I would keep an eye on is the commercial real estate market. I know of a lot of large companies that are actually trying to get out of a lot of leases that they've signed, or trying to, wait for the leases to expire and to end them. And I'm seeing mega shifts in major companies where they're like, hey, dude, you got to come to Dallas. What do you mean? I live in Chicago. We're killing that lease. So if you want your job, you got to come to Dallas. I'm seeing big companies do that. It's not just one local area. I mean, it's nationwide. What if their headquarters is in New York? Well, you got to come to New York. What they're doing is they're trying to consolidate their offices to get rid of the expensive leases that they have. And I would expect commercial real estate to take a bloodbath in 2024. Another thing that you need to watch out for is the banks. We're in Q4 2024, and being that we're in Q4, we saw through Q2 and Q1, if I'm not mistaken, or even into Q3, we saw banks collapse. Why did the banks collapse? Well, what they did is they rates of interest so much they were sitting on some bonds or some CDOs or some debt obligations that were not worth as much as what they should have been because they rose the rates. So like, well, the new rate's 8%. Why do I want these 3% bonds or these 3% CDOs? I don't want those. Now the banks are getting bailed out, or you're seeing the FDIC come in and take these banks over and reassign them to the highest bidder. Some of these big whale of banks are buying up a lot of these smaller banks. But what happens when the banks can't buy out the other banks? Then you're going to start seeing government funds come in there. It means that we're going to need to replace those government funds. How do we replace those government funds as taxpayers? Well, we're going to pay more taxes or pay our taxes, and we're also going to pay higher interest rates to help pay for that. In one of my videos before, you heard me talk about the silent tax. The silent tax is high interest, and that's what's paying for all this government reckless spending. I read the other day that the deficit was close to $1.7 trillion in 2023, and it would have been $2 trillion if they would have got away with refunding or forgiving a bunch of loans. Instead of, hey, COVID's over, let's go ahead and quit all this frivolous spending, Biden just said, let's just continue the frivolous spending. When you have frivolous spending, you have to raise interest rates to offset all the inflation, and you're also going to have to take taxpayers' money. So taxes and high interest is the byproduct of frivolous spending. In COVID, we had frivolous spending. If you could get a loan for 2%, why not, right? I got a 5-year-old truck in 2021 or the end of 2020. I'm paying 2.59% interest on a 5-year-old truck. Like if you were to go look that up today, I bet you would probably pay 8 or 9% on a 5-year-old truck these days. I'm looking at the Cadillac commercials. You can get financing now for 3 or 4% on a brand new vehicle. So what's it going to be on a used vehicle? It's going to be several basis points higher. Once again, that's slowing down the markets. It's slowing down the car market. Who really wants to pay 9% interest on a 5-year-old truck? Well, nobody. So what are they going to do? They're going to drop the price, right? So to make it more affordable, or you're going to pay cash. So if you're paying cash and everybody's paying cash, well, eventually the cash dries up. That's what we're going to see in 2024. You're going to see cash drying up. What's the old Warren Buffett statement? You're going to find out a lot of people who don't have their shorts on when the tide recedes. I know a lot of people that don't have shorts on right now, and the tide's starting to recede on them, and they're starting to feel the pinch. I mean, lucky for me that I got so many rentals. If I could work with somebody through COVID, I can work with them through this too. I don't know exactly what we're going to see in 2024, but I will see this. We're going to see an election, and people are going to get excited about that election. You might start seeing a few changes. It might be better. It might be worse. You can't predict the bottom before the top starts coming back, but I do know we're on a downward decline, and I just don't know when that's going to stop. When they start turning down the interest rates, you're going to start seeing the bottom. They start turning them down some more, you're going to start seeing it take off. So just follow the Fed. Always pay attention to what the Fed's saying. You'll get a lot. If you can get a deal on real estate and you know it's below market and you can afford this high interest, even if it's on a short term, and it's a deal and it makes sense, I say go ahead and buy it. Don't forget to hit like and share and hit subscribe.